Hey everybody, this is Jim at SP500chart.com. It is about 4:30 on September 16th, 2013, and we're going to look at the chart using some time-honored techniques. But before we do so, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Looking at a 30-minute chart to start with. Wow. Boy, this is a real interesting situation that we've got brewing here. Because I love the fact that we've had this nice big leg up. Don't get me wrong, but I still am concerned about the issue of not having had a right shoulder over here on what otherwise looked to have been an inverted head and shoulders pattern, and it should have been in this little oval right here, left shoulder, head, right shoulder. But we didn't get that. Instead, we got a left shoulder, then we got a head, and just about at about the time that we were able to pinpoint where the neckline would have been, we just got a flat-out breakout. Now, here's what's interesting. Today we had this nice big gap up, and by the way, I've told you that I had a SPY position down here in the very low 1630s. I sold it on that gap up. You know, we might get up to 1715, but I didn't want to look at that profit and say, gee, I just need to eke every last little bit of it out. I just didn't feel like doing that. And since I told you I had that position, I feel that I don't want you to think that I still have it, because I don't. So, but there's a very good chance that I may be kicking myself in the next couple of days, and I'm fine with that. Because I believe if this market does get up to this blue line, I believe we will find resistance here. And that should be setting up another move down to give us what may very well be another buying opportunity. But what's interesting is we gapped essentially over this old neckline, and it sort of looks like the S&P is just hell bent for leather to try to set a new high. Now, we did have weakness from about midday on, but you know, when you look at the kind of move that we made here, you know, gapping up from, come on, give me my tool, gapping up there we go, from 1688 to over 1700, about 1703. That's a 15-point gap up, and then we had the little rally. But I don't think it's unusual to see some of that get given back. So I'm not that particular worried about it. I believe we would, if this selling were to continue tomorrow at this point, I believe we will probably get some gap support at about the level where that gap took place. Just a little bit under, well, let's say in the mid to mid-high 1680s, if we come down to that level, because we ended the day on that old neckline that we'd been looking at and extending it forward for a while to try to determine whether or not this was a line that the S&P had the strength to get over. And at least for today, the answer to that question is yes. Now, here's another thing I'll share with you, and I really would encourage you guys just to put what you know to work here, because I'm going to leave our target here roughly 17.15. But I want to tell you, I'm still concerned by two things. A, no right shoulder. B, no real rhyme or reason to this ascent off of 1630. There's just nothing really. It just looks a little out of control. It almost looks a little bit spastic. You know, we've seen so many nice rallies that have followed these channels. This one just looks, it just looks a bit bizarre. So, knowing that we're so close to our all-time, well, hold on. Yeah, knowing that we're so close to our all-time S&P 500 high that was set back in the early part of August, and the fact that we are also pretty close to this trend line drawn over the last two significant tops, for me, that was close enough. So that's what I did today. But we may find support on this neckline, and if we do, we may come on up to roughly that 1709, 1710 area. And if we can get over that, then it looks like we may be making that target from that not completed inverted head and shoulders pattern at about 1715. And if we make that, why not go ahead and get up to 1720? But as far as my SPY position, I got out on that at about 1703 this morning. So guys, that is your video for September 16th. Again, if you can find some set of trend lines that works for the past couple of weeks, please share it. You know, maybe we just ignore this dip right here and just kind of average out these tops. Maybe that's not such a bad idea to do. So let's just leave these gray. They'll be on your live chart that you might want to link to. But again, you can see this really doesn't add up that nicely. We've got some violations above and above this resistance line and underneath this support line. So I'm not tickled with this channel, but you know, I think I'll leave it. It's as good as we're going to get right now. So guys, thanks for watching. Take care of yourselves, and let's see if we get a little bit more oomph out of the market tomorrow. Oh, by the way, Apple, wow. Just Apple really got clobbered today. So therein lies your weakness in the NASDAQ. So guys, take care, and we'll do another video after tomorrow's close.